Big focus on the Bank of Japan. What did you think of it and the reaction that we saw? I mean, there were some big swings certainly for the Nikkei, understandably. What's your takeaway? I mean, this open-ended commitment to buy assets, that was a bit of a surprise.
I guess the big event around the region today was the Bank of Japan decision. It was a two-day meeting. The market was expecting to see that inflation target being set at 2%, which we saw came through. But if we have a look at the reaction of the markets, we actually saw the Japanese Nikkei selling off and we saw the yen strengthening. And usually when you expect news like this, you expect the opposite. You expect the yen to weaken and you also expect the Japanese market to go up. But I guess what's happened is that this has already been priced into the market. So what we saw was a buy on the rumour, sell on the fact reaction, and once the news actually came out, we saw profit takers come in. In fact, since we've seen Shinzo Abe looking likely to win the elections in Japan, and that's since mid-November, we've actually seen the Japanese markets up by around about 25%. So the market had been pricing in more quantitative easing, more money printing. We saw that coming through from the Bank of Japan today. Open-ended purchases starting from January 2014, and they'd be buying Japanese government bonds as well as T-bills. So altogether that was a big event, but in terms of the reaction of the Japanese markets, we did see some profit takers coming in, and that of course was already priced into the market. But for the Australian share market, in the end not much happened. We were pretty flat. We saw about $3 billion worth of stock being traded. Early on during our session though, we did reach a 20-month high before retreating from that high, but a reversal in some of those stocks that did extremely well yesterday. NAB and QBE Insurance were some of the best movers yesterday. Today we saw a bit of a pullback in those two stocks, but of course with the US holidays overnight, we weren't expecting too much on the market today, but we are expecting to see volumes getting back to normal tomorrow. And with BHP, the biggest stock in our market, coming out with its quarterly production result tomorrow, it should be a big one.
Yeah, we'll get your production numbers tomorrow.
I guess if we have a look at BHP, it's done well in the last quarter. The stock price is up by 5.4%. Today we saw it up by 0.1%, but we get a little bit of a clue on what to expect through Rio Tinto's quarterly production report. And if we have a look at Rio's report, we saw quarterly iron ore production up by around about 2%. So BHP expected to be pretty flat in terms of iron ore. I guess one of the things we're watching closely is the petroleum division. Because of the acquisitions that BHP has made, what we are expecting is the petroleum, the oil and gas area to really make up a larger chunk of profits, and we're expecting to see this increase from about 23% previously to around that 30% mark. And of course with Rio Tinto heavily writing down its aluminium assets, that's one thing we're going to be watching very closely. We have a look at the aluminium assets of BHP Billiton. They currently have a book value of about $8.6 billion, and if we have a look at different investment houses, they have a net present value of their aluminium business about the $5 to $5.5 billion mark. So we could see some write-downs related to that aluminium business. Of course, in the last 6 months, we've already seen write-downs related to the shale gas business, but that's not expected to come through in terms of these quarterly production reports results. But we are watching that aluminium division closely. Iron ore expected to be pretty flat given Rio Tinto's experience in that area as well, and we're watching that oil and petroleum division and expecting a good one there.
End of the spectrum, we saw FKP Property Group, one of the best performers today on the ASX 200. What's going on here?
We've seen this stock on a bit of a tear in 2013 so far, and that's quite surprising given that in 2012 we saw one of the worst performing stocks losing 57% in value. But today the stock was up by 6.2%, and this has been quite a common occurrence in the year so far. And I guess one of the things that the market's looking towards is the float of its retirement assets. We are expecting this to occur early on in the year, and that seems to be supporting the stock. FKP Property has also committed to cutting about 10% of its overhead costs in this area. Of course, if we have a look at FKP Property, the primary business is the retirement assets that it holds, and then the secondary businesses, it also does commercial as well as residential construction. But it does look like 2013 is going to be a game changer for this particular stock. Hopefully the floating of its retirement assets unlocks some value in what's been a pretty tough 52 weeks for shareholders. So the share's doing well today. And not only that, I think the turnaround stories have really come into their own in terms of stocks. In 2013 we've seen the media companies doing well, we've seen some of those retailers doing well, and it does look like investors willing to take a little bit more risk and having a look to see where those big stock performances may come in 2013, and it looks like some of that money going into possible turnaround stories.